What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about the pure AI play, probably the only purest artificial intelligence play, which has rallied a little bit over 200% this year in 2023. And yesterday it was down a little bit over 26%, so it has been incredibly volatile, and we're going to dive into exactly what happened, what went wrong, why is the stock price really volatile, why is it coming down, and is it worth buying at these prices? It's trading a little bit over $23, $24 per share. I'm going to be going over the entire fundamentals, the technicals, we'll talk about it. And as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And of course, don't forget the link to our Discord and Patreon is going to be down below. And there is very limited spots left. And I actually opened up a new spot or a new tier for all the members, only 5 spots in that tier. If you want an exclusive 5-page market report, a stock report for a stock of your choice, you can join that tier and you can request a stock, and I'm happy to do a comprehensive fundamental and technical analysis and present you a 5-page report. And I'm going to be spending hours of my time kind of analyzing that stock for you. So that's also available. But anyway, link's going to be down below if you're interested in joining. Again, you'll get access to all the buy and sell alerts, options alerts, trade ideas, all the private member videos. Everything is going to be included. And we're also starting off our Easter sale. So Easter is going to be on April 9th. So we do have a 60% offer on the bundle, which is the fundamental and the technical analysis courses. And they have combined over 30 hours of content and I think over 80 plus lectures for fundamental and technical analysis. So you can use the coupon code Easter to take advantage of it until April 9th. So after Easter is over, this coupon code will also go away. So the company that we are talking about today is going to be AI. It's literally called AI. That's C3 AI. And the stock price has been incredibly volatile. So if you come over to how artificial intelligence or this company has done since the beginning of 2023, literally on December 30th, this stock was trading at $10. And at one point, this was trading at as high as $34 the day before. It rallied over 237%. And year to date, this stock is still up over 118%. Yesterday, of course, it was down a little bit over 26%. And pre-market right now, we're just down about 3% at the moment. So this is where we are right now for the stock. This is the chart that I just showed you. But I really want to highlight 2 things. What you'll notice is the price action has really picked up, and the volume. Take a look at the volume for this stock. I mean, this ChatGPT, this generative AI hype has really resulted in this stock to rally pretty aggressively. And as a result, we have seen a lot of volume behind this move for AI as well. Now, what's really interesting is that this is actually one of the heavily shorted stocks. So you'll notice that shares sold short as of March 15th, 2023 was over almost 25 million shares, which was roughly around 28% of their float, which is a pretty substantial number. If you come over to another resource, this one also shows AI at the top of the list with 25.86% short interest, and the previous short interest at just over 24%, and short change 1.2 million right now, and shares short volume or value was 592, close to $600 million worth of shares being shorted for this stock. And while yesterday, the fact that the stock price was down a little bit over 26%, it was selling off pretty aggressively from 32 all the way down to 24.95, was yet another short attack from a short seller. So Kerrisdale, very similar to Citadel and some of the other short sellers out there, pretty much wrote a letter to C3 AI's auditor, Deloitte, and pretty much mentioned a serious accounting and disclosure issue. They mentioned that C3 AI is, booking in fictional revenue. So what really happened was that C3 AI, first of all, is a SaaS company. For those of you who don't know, it's a B2B business, right? So it is very much focused on allowing companies to deploy large artificial intelligence applications and suites and kind of saving them on cost and resource and all that stuff. I'll go over exactly what they do in later parts of the video. But if you read further, you will notice that Kerrisdale first said it was short shares of AI stock back on March 6th, so they are currently short, and saying, among other things, that the stock had surged merely on the hype around ChatGPT, and the underlying business was experiencing serious financial pressure. C3AI did not respond to the initial report, but Kerrisdale didn't accuse the company of accounting irregularities up until now, because the stock price literally rallied quite aggressively. And what they really mentioned was in that report that the letter also said that the company improperly recorded direct revenue costs as R&D expense to inflate gross margins and classify professional services revenue as subscription revenue. Another really concerning part about that report was that they were claiming that the company's accounts receivables have soared while revenue actually declined in the most recent quarter. Accounts receivables represent recorded revenue that hasn't been received as cash yet, and so it's odd to have receivables grow without corresponding growth in revenue. In C3 AI's own 10Q filing, the company acknowledged that its unbilled receivables, so the receivables that they haven't quite billed yet, rose from $19.9 billion to over almost $88 million, and also said that $79.6 million of those unbilled receivables were from one of their biggest customers, Baker Hughes. And Kerrisdale in that report also noted that $80 million in unbilled receivables represent nearly 30% of its total revenue, and concluded by saying that it appears to us that C3 AI is booking fictional revenue in order to meet consensus analyst estimates and cover up the fact that in reality, its products are unable to get traction with customers and its business is failing, is what they mentioned. That's a pretty significant short attack if you ask me, and of course, making all sorts of allegations and claiming all these types of accounting frauds and whatnot. C3 AI, I don't think has responded to this yet, but that's one of the reasons why the stock price is selling off pretty aggressively. So this is a very quick breakdown on what the company actually does. So it's a C3 AI is like a software application platform, patented model-driven architecture enabling organizations to simplify and accelerate enterprise artificial intelligence application development, deployment, and administration, and has a subscription-based model as well. So they do have a lot of contracts. They've got a lot of unbilled revenues. They've got a lot of receivables. I mean, that's the nature of the business. Kind of very similar to Palantir, right? Very, very similar to Palantir, where there is enterprise AI. They're B2B. They're working with a lot of other companies. U.S. Air Force is part of it, and they've also got a lot of other clients, including Shell and some other energy giants as well. So C3 AI has built a single integrated solution that enables customers to rapidly develop, deploy, and operate large-scale enterprise AI applications across any infrastructure. And customers can deploy C3 AI applications on all major public cloud infrastructures, including Azure. We got Amazon Web Services, we got Google Cloud, private cloud, or hybrid environments, or directly on their servers and processors as well. So that's really what they offer. And I find it difficult to actually believe that their business is not gaining traction, because if you take a look at what's really happened since November at the end of last year to where we are now, I mean, AI has just taken off like wildfire. Talk about NVIDIA, talk about Microsoft, talk about ChatGPT, generative AI with Midjourney, OpenAI, like all these things have really been where the focus has been, right, for a lot of companies. So I doubt that C3 AI's business is not able to gain traction. I think, if anything, it is quite the contrary. I think there is going to be some potential in this company. However, I want to be very clear. This is not a profitable business yet. Okay, so if I go over to the fundamentals, you can see the revenue growth has been good. They've been able to grow revenues from 91 million to over 252 million, 266 million. All that is pending the allegations made by Kerrisdale. So we're going to learn more about whether there is any type of receivables that are being fictional, or if the company is kind of accounting for any type of revenues that are not really there. We'll learn more about that as things develop. But this is certainly a company that has a lot of potential in artificial intelligence, because it is one of the first movers, and it's also helping other businesses to take advantage of AI. And the thing is that in the future, 10 years from now, I have no doubt in my mind that most companies, I would say 90%, 95% companies, will be using some form of AI in their business operations to make them more efficient, to save time, resources, and capital. And they will be utilizing some applications in AI, if not all of their processes will be functioning with artificial intelligence. So they are definitely the first mover advantage. Revenues growing, gross profits growing, but again, they're not profitable. That's something that we have to understand from a fundamental standpoint, that this is a company that, again, on a bottom line basis, net income basis, they have been generating losses after losses, unfortunately bigger losses last year, just under $200 million. And if you come take a look at the balance sheet for the company, the cash amount that they're currently sitting on is at the moment $772 million with very, very little debt. So in that sense, it's good, because it's got plenty of cash on the balance sheet with very little debt, almost no debt. So they've got a negative net debt, and we've got a very solid current ratio and a quick ratio of over 7. So you've got great liquidity, right? But you've got little to no profitability, right? In fact, you've got bigger losses. And when it comes to the growth, it is growing, but there are pending allegations from the short seller. So those are some things that I wanted to represent, address in this video. And also, when it comes to share dilution, the company has been issuing a lot of shares. So if you come back over to financials, income statement come down a little bit, you'll notice that the share count has gone up from 35 million to now sitting at well over 100 million. Last 3 years, they've been able to grow their share count, and it's not that difficult to do that. And that's one of the reasons why the cash balance has also improved, because of how much share dilution they're doing. So if you take into account the 2022 revenue number of $252 million and kind of put AI in an isolation here, not with respect to the short sellers allegations, but simply look at the revenues and really expect them to grow. By the way, let's just quickly take a look of what analysts expect them to grow at. So if you go over earnings estimates, we've got earnings turning positive in 2026, and revenue is expected to grow by an average of about 20%, right? 5% this year, then 20%, 20%, 26% to $485 million by 2026. So they do have some nice linear growth expected. If I go with 25% growth rate for this company over the next 5 years for revenue, for sales, again, we're using a price to sales multiple model and not a price to earnings, because the company does not have earnings. And if we go with, let's just say 7 times sales multiple, because it's a software company, they do deserve a little bit of a higher margin. I mean, Microsoft trades at 10, 12 times sales. NVIDIA is in a whole different world, trading at over 25 times sales. So if we go with 7 times sales for this business, and we go with a higher discount rate because the risk is incredibly high, investing in this company, because it's not profitable, they still need to execute, and we go with a 20 to 30% margin of safety, right? So let's just do 20% margin of safety, and share dilution is going to be closer to 4 to 5% on average. I'm going to go with 5%. We get down to a fair value of $16 per share. And right now the price is at over $24 pre-market, which means a 33% drop, and this stock could be worth looking into. But I want to be very clear. This is the most basic analysis, because the company is not profitable. It doesn't have positive free cash flows. The only thing it has going for it is the potential growth in AI, because it's a first mover advantage. And the second thing is the balance sheet. That's the only 2 things that somewhat makes sense right now for this company. But that being said, not profitable, no positive free cash flows, lots of share dilution. There's a lot of cons with this company than there are pros. But the pros potentially can be worth a lot, and are worth the risk, of course, considering the fair value. So for me, it's a very simple hard pass right now, but it's not completely out of question. We'll continue to monitor this stock. If it drops down to $20, that's going to be a potential support. Can set us up for a potential swing trading idea there from a technical standpoint. But closer to $14, $15 is going to be that next sort of resistance level that I'm watching. Pretty much previous resistance, potentially acting as a new support for C3 AI to take advantage of this AI train. Let me know your thoughts down in the comment section below. What do you think about C3 AI? Are you trading this? Are you buying it, selling it? What are your thoughts? Let me know down in the comment section below. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. And don't forget, the Patreon Discord link is going to be down below. There is going to be limited spots left for the first week of the month. And you can access all the buy and sell alerts, options alerts, trade ideas, swing trading videos, all the member benefits, including there is an additional tier that I launched only for 5 people that want to, really get a good grasp on the fundamental and technical analysis on one stock of their choice. So I will be doing a full comprehensive analysis for them. And of course, our Easter sale has begun. So coupon code Easter for the fundamental and technical analysis courses. And that's the bundle with over 60% off. Anyway, as always, happy investing. I'll see you all in the next video.